Good morning, everyone, and welcome to this, our Thursday morning webinar. Today I have some fantastic speakers with me. My name's Michaela Thomas, and I'm from the marketing department, and I'm just here to show you a few sort of housekeeping rules, a few tips for using Crowdcast this morning, and then I'll hand over to my esteemed speakers today. So just to get started, on the right-hand side of your screen, you will see there is a chat box. Please say hi. It's wonderful to see all of you here this morning. Give us a wave. Tell us how things are going with you, and just greet everybody else who's on this chat with us this morning. At the bottom of the screen, you will see we have a couple of polls running. We have one that's just got to do with if you want some more information about Mill Park Business School, we can contact you further with regards to our offerings. And then we do have a question with regards to the actual talk today, and we'd love to see your feedback on that as we get into that a little bit later. Also at the bottom of your screen, you'll see there is an ask a question facility. This is where if you want to ask any of these speakers any questions, if you want to share some thoughts and maybe get an answer or two from either Jamila or Matthew today, that's where you'll pop it there. So as you can see, I've already put one there for comment. That'll be a sort of tester one for you guys. So one of the questions that we have posted today is taking into account the rapid change in banking, why opt for a career in banking? So give a little comment there, let us know your thoughts, and also ask your own questions, which we will tackle at the end with our Q&A. But for now, I'm going to hand over to Jamila, who is our senior lecturer in investment management at Mill Park Business School, and she's going to introduce our lovely speaker today. So over to you, Jamila.
Thank you, Michaela. Good morning, everyone. Welcome to this webinar on banking. The topic for today is Banking is Dead, Long Live the Banker. And to speak to us about this interesting topic, we have Mathew Allan. Mathew is a banker. He works for a prominent South African bank. He has over 20 years experience in banking, focusing on strategy, specifically on banking strategy, and recently also on technology, looking at all the changes in banking as banks embrace digitization. So today, Mathew is going to speak to us about all these exciting changes, and especially all the disruptions that we have seen in banking. And so I'll hand over to you, Mathew. Looking forward to hearing your presentation. Thank you.
Thanks. Good morning, Jamila, and good morning, Michaela. I hope everyone can hear me. Don't know if everyone wants to just say something in the box if you can hear me. If you can't hear me, then we can just double check. Cool. Thanks, Jane. All right, great. So morning, guys. Just a couple of things. I was going to show you a video, but I believe that that's not available. So you will see the very first slide as we move forward is something that we're not going to be able to show, but not to worry. I will put the URL into the chat. And please feel free to have a look at it in your own time. So an introduction, I suppose, to me is I am Mathew. I am a banker, and I am definitely not an academic. So let's maybe get that out the way first. I have spent a little bit of time doing a little bit of studying and trying to get to grips with this ever-changing world. But I have had the benefit of being schooled quite drastically over the last couple of years in financial services. And it is a very interesting time to be associated with banking right now. What I want to sort of talk about really today is a couple of things. So one is the reduction in the banking workforce. And the reduction in banking workforce really is around those generic roles that we know and love, and every single day who we engage in as we walk into a banking hall. The other is the rise in very sophisticated technology that 2 or 3 years ago was not necessarily available. Just to give you an example of what I'm talking about, in the last 2 years, I have actively used artificial intelligence, which takes OCR capability, which you may or may not already know, and applies that capability to learn information, documentation, records, and then enables the system that it uses to thereafter go and build additional components on existing workflow solutions. So that capability only came about very recently, but that capability is very much available in our businesses today. So the video I was showing you that you see on screen really talks about what the future of banking looks like, and specifically the roles associated with banking. Now, this is a very recent video that was released by the World Economic Forum, and they really do some cool stuff around presenting information, presenting trends to organizations currently. But one of the things that it talks about now is the manner in which obviously COVID and the pandemic has really changed and exponentially changed things that we already knew about. In 2018, they were talking about the rise of things like UX, UI designers, how DevOps people come about, and the prominence of that workforce moving into banking, and the slow removal of generic roles out of the banking environment or financial services environment. Now, last year's obviously advent of COVID, that has exponentially changed that significantly. So what I'll do is I think it's a really cool video. It talks very much to the evolution of roles. And obviously in banking terms, that is becoming definitely more appropriate. If we can just maybe turn to the next slide. Thank you, Michaela. So the way I see it, there are sort of three components that are going to change the way in which banking is going to show up in future. The first one, obviously, I'm going to talk about is around business operations and digitization. So I'm sort of going to go micro level, talk about business operations. The next is going to be at a macro level, and we'll talk about that a little bit later, and that talks around what banks are going to potentially look like. And the third is going to be around things like cryptocurrency and blockchain at the end. But it's really around these three components and how they're going to take our current space and evolve them. So if we go to the next slide, I think we're just going to talk about, cool, thank you. So as we as traditional bankers sort of arrive in the workplace, and as we start engaging with our work, our banking halls, we start seeing that the traditional person in the working environment in a banking hall starts sort of reducing. So for those of you who have moved or been sort of engaging with banks for many years, you start seeing that huge bank of individuals sitting there taking in money has reduced significantly. You also may have seen that a lot of these people now no longer have the same physical presence. And as we go into a future view, you start seeing that the person who used to be a teller potentially is no longer there. The study that came about in 2018 talks about how digital self-service is going to become more prominent in banking. Now, the idea is that a client will walk into a banking hall, and the client is not necessarily going to partake in banking as they traditionally used to fulfill it. They are going to walk in and they are going to be enabled through a whole array of digital touch points. The role of a banker really becomes, how do we assist and enable the client to self-service them, the process, and how do we enable them to navigate this process more efficiently? The person helping them with banking type functionality is going to cease, and that information is going to be readily available at varying touch points. Now, this stuff is not far away. In 2018, we started talking about it, but if you start looking at some of the banking halls already, you start seeing very advanced semi-assisted zones that are already popping up. and self-service is becoming a more prominent space. You would have seen in some of the South African banks, things like cards are no longer something that you go and fetch. They either get sent to you, or alternatively, there are facilities and mechanisms that enable you to self-service and enable you to collect this information. You see a much more dynamic set of apps that are going to be made available or already made available that enable you to perform a lot of the work that a banker used to do. The other thing that you will start seeing coming up is the way in which we onboard clients. So the cornerstone of a banking environment or banking business has always been you as a subject matter expert on personal financial services is somebody that a client can walk into a banking hall and plug into. But the fact of the matter is this information is now readily available. There are APIs that the organization uses to call services that make things like creditworthiness available at the touch of a button. It's really about that banker's ability to navigate that information a lot more dynamically. Maybe we can just shoot to the next slide. So if you look at this slide, this is a study by McKinsey, and I just want to, there's a lot on the slide, but there's two key points that I really want to sort of tackle. The first is we have already been told that a lot of the work that is already available within the banking environment can be automated. They are putting a figure of 43%, but let's call it 50% of all functions that are currently done can be automated. And that is not things that ultimately will eventually one day be automated. They're saying that all functions that are current can be automated to this degree. But the next component for me, and I think one of the reasons why this discussion today is so apt, is the biggest volume of persons employed in financial services right now relate to the administrative component and the relationship management element. Now, this is really important because as you walk into our banking halls and as you walk into our business banking and our retail relationship banking centers, a large number of the headcount and people that exist in those spaces are really geared to dealing with those type of functions. Now, our Generation X, our 30s and 40s, and some degree, some of our millennials, have been within these organizations for long periods of time, and that's what they are geared for. That's what they are skilled for. Now, this functionality, as you can see, will start reducing over time because a lot of the work and a lot of the skills and a lot of the capability required to perform those functions will start to reduce. Now, it will normalize over time, but what you are left with is you are left with a large number of these people and a large number of our workforce that have limited skills associated with future roles. Now, in my organization that I work for, when you start looking at some of the development cycles associated with our GT side, there's something, if you start looking at SAFe methodology, when we go into a development cycle or a product increment cycle, at the beginning of 2020, there were roughly 40 development teams across the organization. Now, these development teams were there taking a lot of the legacy systems and a lot of the legacy processes to target state. So a group of people which consisted of product owners, scrum masters, business analysts, process engineers, and these guys come together in a scrum if you start using agile methodology. And these are very much frontline business people, subject matter experts, and they are really about taking the organization's capability to a target state or to a future level. Going forward, and if you look 18 months later, those 40 development teams increased to approximately 110 development teams. And the 2,000 different stories that had been developed in order to do some of this development and take our organization's systems and processes to target state had increased to 8,500 stories. Now, the reason I'm saying this is because a lot of the relationship and administration type functions have started to dissipate into the background. And a lot of the more data science orientated robotics and AI components and very much customer experience, those elements have been pushing forward. And because of their prominence, you are starting to see significantly more number of people coming through, and they are partaking in the development within the financial services environment. The problem you have now is that you have this very clear disconnect. You have this group of bankers who have very clear core skills that sit there that need to be augmented, and they need to do so relatively quickly, because the future of work is around reducing the relationship and administrative component and playing more in the collaborative data science, robotics, and very much customer experience side. So there is a very, very large gap. And that shift really relates to the shift between cognitive skills and that shift to socioeconomic and technical skills. Now, therein lies a problem, but also therein lies some of the opportunity. Michaela, can we maybe just go to the next slide? Great, thanks. So I've taken a couple of snippets, and these snippets really relate, and they are very recent. So if you have a look at, you'll see that most of them come out of July. But there are things like Deloitte in June who talk about how they have said that all staff can effectively work from home forever. No problem, great. These are management consultants, so that shouldn't be too big an issue. But where you start seeing closer to home, where you obviously see UBS and AXA, but then closer to home, you see somebody like Nedbank talking about a shift towards a work from home, it becomes a very, very different type of discussion. Now, as a banker, the expectation is that you show up in the day, you partake in the strategic sort of development cycle of what the organization has put forward, and you play a part in the acquisition of clients as well as the servicing of those clients. Now, no problem if you are a normal generic banker. The problem comes in is how do you engage with those people on a day-to-day basis if you are now no longer working physically from your workspace. Now, again, cool, no problem if you're sitting there and you're writing code. Different if you're somebody who is partaking in the relationship business. Now, again, just referring back to the other slide, we don't need to go back to it, but again, the relationship management role is something that can be plugged into any type of financial services environment and potentially plugged into any type of industry. But that relationship management environment can no longer be just purely primary or core. It has to be supplemented with other skills. So I suppose the question is then, do we think, if we consider this and we consider the exponential rate of change, do we think that bankers in their current form have the right level of skill to continue? Because a relationship management function is very much necessary still, but potentially may not be the only requirement that they're going to need to have to possess, but it will need to be supplemented with a whole array of other elements. The other thing as well is a person who is going to actively participate within the financial services or banking environment will need to not just have cognitive core hard qualifications. There is a need for you to understand things like safe methodology. There is a need for the team to understand things like agile. Now, these methodologies are things that are actively used within organizations, and they are happening at a far higher rate. And the reason for it is because the return on investment needs to happen a lot quicker. Things like old project management waterfall approach is not relevant because the burn rate is too high. The requirement for generic bankers is to be able to produce short wins with short-term failures, quick fixes, and then commercialization of those. The question is, are we apt enough? Are we relevant enough? Do we have the relevant skills to operate like that right now? Because that's what our world demands right now. Cool, maybe we can just go to the next slide. So I want to stop and pause in this a little bit. And I want to talk about this particular slide in I suppose, 2 or 3 ways. The first is the generic roles that we propose there. So front of house banker, when I say front of house banker, I'm talking about the real traditional banker, the person that arrives, the person that's a financial banking SME, and that person, how they used to show up. Now, if you look at the top, we talk about the various generational elements around baby boomers, Gen X, millennials, Gen Z, and obviously Gen Alpha. We start seeing the relevance of that person. Now, I'm not saying that that person falls away. I'm starting to say that that relevance potentially reduces over time. The replacement of a banker suddenly potentially becomes something a bit more digital, something a bit more, I suppose, augmented by somebody who is able to enable somebody to navigate, rather than an SME sitting down in front of you and talking about the features and benefits of a product. Now, we'll get into the alternatives, but something like WeChat, which already has 1.2 billion users, is a definite alternative to a banker. But we'll get into that at a later stage. A teller, a real hard-coded teller, somebody who takes money in, somebody who does checks and balances on your accounts, somebody that supplies you with that information, suddenly gets replaced by normal robotic process automation, or RPA, and we don't need anything overly complex. There is no computer learning that sort of jumps in there and is needed as an interim. Something as simple as RPA is able to do all of this. And the other alternatives, obviously, and it's based on investment, is something like intelligent depositor. So you being able to walk into a business, use a facility that enables you to take funds, gives you information, enables you to do queries on your accounts, and where there is a need to engage with somebody around a query, pushes you off to either a chatbot or alternatively at the sort of very last stretch, somebody who sits in the back office that is unable to give you that information. And the other alternative is business operations. Now, business operations is a really big and all-encompassing space, and it talks about all of those large numbers of people and structures that sit behind you and all the background that have been developed over years and years. And they are sitting there making sure that those various components that link up at the background actually work. Now, things like APIs enable you to take those services and reuse those services, effectively nullifying those people. Now, as much as these group of people sort of tend to reduce in relevance over time, there is another group of people that are already starting to ramp up their relevance. And I think in 2017, 2018, calls already coming about to saying the roles of bankers potentially won't exist in the future, or they will in a very limited way. But there is also a need for a future state of work that we don't yet see. Now, we are already starting to see them, and they are things like business designers, UX, UI, and CX designers. There are financial SMEs, so not just bankers, but real financial people who are sitting dealing with consumers and talking to them more than just about their check account. Then there are things around data skills, and then more, or I suppose most importantly, it's around human and social sciences. Now, what amazes me most of all around these things is that the bottom persons in the slide, the ones that have the most relevance, are effectively the ones that are working on replacing the people at the top. Now, in between, there is a big gap. The skill of a front of house person, the skill of a teller, and the skill of business operations is still needed, but it is needed at a lesser level, and less of those people are needed. Those people will be supplemented with the other people, and between them, they are going to build the replacements for the future. So we are in a really cool space at this point in time, I think. We're in a time where banking and traditional bankers are still needed. The skill sets are still needed. Some of the methodology is still needed, but very quickly they need to be replaced, because as we replace it, it enables organizations to become more efficient, more effective, and because of that efficiency and effectiveness, it means their cost structures are going to simply just reduce over time. And I think that's where you'll start seeing the rise of the alternatives, and that's around really a cost-efficient structure. At this point, I really just want to put two questions in the room. The one has already been asked, and that is taking into account the rapid shift. And this is not something that I talk about that we are yet to see. We are already seeing a reduction in headcount across financial services, whether they just be generic traditional banks, whether they be life assurers, whether they be short-term assurers. All of these are already exist. And then the other is, do you think there is a technical gap in the future banking skills? So is a career in banking still relevant? Absolutely, I think it is, but I'd really like to hear your views on that. But more importantly, for the person, the budding banker, the person that is wanting to study banking, want to study financial services, and wants to have a really good understanding and granular level set of information around what banking is that knowledge going to be enough? Or does it have to be supplemented with some very key skills that are not necessarily that prominent right now, but are happening at a real exponential pace? Great. So then the next component, or the next disruptive element we want to talk about, is really banking alternatives. And banking alternatives is really around, there are very traditional banks out there, and those very traditional banks are structured into retail banking, retail relationship banking, business banking, and corporate investment banking. And you have value propositions that are built into those channels, and they are there and structured in such a way that they are able to consume as much of their market as possible and able to add as much value to that market as possible, and create and generate income that hopefully will extend into generational. The issue of the virtuous circle, being able to capture a business as well as an individual within that business and all of the dependents, is a really, really lucrative idea. But traditional banks really sit with very, very strong and very large and very costly structures that sit behind it, and including legacy systems and legacy processes that have become really, really difficult to break. If we can go to the next slide. So for me, there are two distinctive I suppose, focus areas. One is banking is going tech, and the other is tech is going banking. If we look at something like Discovery Bank has probably now, up until I think it was at the end of this last year and into February, they have managed to open just over 500,000 new accounts, which is extraordinary, taking into account that the South African banking market is a really saturated market. And on top of that, that equates to approximately 300,000 new clients, which means that they have taken those away from traditional banks. Time Bank is a very interesting one. Time Bank, as it marches, managed to open 3 million new accounts. Again, in a saturated market, but also focused on a different type of LSM. Bank Zero has yet to launch, and I think they've been set back by COVID. But what all three have in common is that they have none of the traditional banking structures that sit in the traditional banks. Time Bank, as you know, uses somebody else's real estate. All that they have is they have a kiosk. Discovery Bank is very much around the engagement model being, we'll deliver the cards to you, but ultimately this is driven through an app. And Bank Zero will be much the same. So these three banks have leveraged technology and done so quite drastically. But in doing so, have taken away a large number of clients from traditional banks. The other alternative is that tech is going banking. So Amazon, Google, Apple are ultimately already going to go into banking. We know that Amazon and Apple are going to be issuing checking accounts in the not too distant future. Apple started with looking at credit cards, but then they went and they teamed up with another financial services company. But ultimately, all that is happening is that banks cease to exist in their traditional form, and the capability around issuing these type of accounts extends to tech. And if you are banking and you want to then acquire additional clients, you need to leverage tech. The thing is that banking products are not changing. A check account has not been changed in the last 30 years. A credit card has not been changed since its introduction in the last 20 odd years or 30 years. The only other things that are changing are the manner in which we engage with these organizations, and that obviously is the rise of digital banking, the use of apps, and more importantly now than ever is around the introduction of rewards. Rewards is definitely going to be and has already been the component that's going to be the disruptor. And if you are not offering an effective rewards program, you're going to fall by the wayside pretty quickly. The next is the rise, I think, of the super app. And the rise of the super app is an interesting one. We already spoke about WeChat. Now, this, I think, is more a prominent issue in space like China. WeChat is really an app that enables somebody or a user to combine a whole host of capabilities. So things like messaging, e-wallet, e-commerce, delivery, couriers, cash, car sharing, payments, shipping, travel. What it ultimately does is it takes all of these components and it combines it into one touch point. In South Africa, Nedbank has developed Avo. It has approximately 250,000 users. But for the most part, what it says is we will not be enabled to grow away from traditional banking. The only way to do so is to go about the process of augmenting our approach, augmenting the way we show up in the market. The manner in which we introduce services and capability is really what's going to be a disruptor for us as an organization. And it is no different to what's happening out there. Things like Alipay or Mathew Allan are all super apps that enable you to perform a whole magnitude of services through one interface. It is the only real way, I suppose, that you are going to be able to capture a very different type of market. And in conjunction with that, it is really around how are you going to capture people's, I suppose, people's interest in your organization, because being able to differentiate yourself is going to have to take a different approach than just offering primary banking products. Cool. And then the third way really is around the use of technology and alternative currency. If we can go to the next slide. Cool. So the introduction of blockchain and cryptocurrency, I think, is something that is definitely appropriate at this time. I think it's not well known that blockchain is actually quite an old notion. It is something that has been around for probably the last 35 years. And as you're saying, electronic anonymous cash has been around pretty much for the last 25 years. This ultimately is really around the ability to engage between peers. So Bitcoin is a peer-to-peer electronic cash system. It was first presented in a white paper by Satoshi Nakamoto, but evidently that is definitely a pseudonym. But the idea is that by creating digital scarcity, will ultimately develop value. Now, there are some very key differences between Bitcoin and fiat money. So fiat money really is money that we all know about. It is the thing, the currency and tender that we all use, and that is the basis of the monetary system and that we understand. Now, Bitcoin is something slightly different. Bitcoin really is, and I just want to give you a definition here. I really like the definition. Each Bitcoin is basically a computer file which is stored in a digital wallet. It's an app on a smartphone or computer, and people send Bitcoins or a part thereof to other people. Every single transaction is recorded in a public list called a blockchain. So blockchain as a technology is the basis of it, and Bitcoin is the value being sent between two individuals. Now, Bitcoin really eliminates the need for the intermediary, and that intermediary in its traditional form is ultimately a bank. There are some very key differences around it, but I think that's at its heart what it really means. If we can go on to the next slide. I really took this because I think it highlights some of the problems that we are going to be faced with when it comes to cryptocurrency. We know already right now it's really prominent. There's a lot of chatter around it, and there's a lot of consideration around, does cryptocurrency become a replacement for fiat money? So if you have a look on the SARB issued a working paper to say that they are busy looking at this, and this was published in June. And what they've said here is that there has been a working group through Crypto Assets Regulatory Working Group, and they've published a position paper on crypto assets. The paper confirms that crypto assets will be brought into the South African regulatory purview in a phased and structured manner. So what they also highlighted around specifically the introduction of crypto assets is two components that I want to take out of the frequently asked questions. The one is cryptocurrency an asset? And the first set of feedback around cryptocurrency is a payment instrument as well as a payment system. So what they are saying is it's not as easy to replace the fiat money system that we already know about, because there are so many different elements to this, and they still need to be defined. Now, yes, we are able to use them, but will it be a like-for-like replacement? It's unlikely. The next is crypto assets money? And the short answer they say is no. And the reason is it is not defined as legal tender. Now, the reason I specifically put this in is because cryptocurrency is very much of our time. It is something that is very prominent. It is something that is spoken about regularly. It is something that is being considered as a replacement to traditional money. But I think there is a large amount of information that still needs to be unpacked. And there is a large amount of information that still needs to be made available to the consumer out there before this can be taken in and then positioned as a complete replacement. On to the next slide, if you wouldn't mind. So I just sort of took a view around what a Bitcoin equates to and what an Ethereum value equates to. If you have a look at the graphs, that was now recently on the 14th of July, so yesterday, and it just talks about the value of both of these two assets. And then again on the right, talking about is crypto a currency? And they're saying, although Bitcoin meets criteria as a medium of exchange, it falls short in the store of value. And then is it an asset? Yes and no, because right now cryptocurrency is considered a digital asset and not necessarily digital currency. So what I'm trying to sort of really articulate with this, I know it is something that has come about and there are a lot of questions around it, is cryptocurrency definitely has a future. We know it has a future. We know it's very prominent across the world right now. Does it pose as a subsequent replacement for our market of a fiat currency? It's unlikely at this point in time. I suppose when you're trying to unpack it and when you're trying to say what type of asset is it likely to be, the question is, would you take a life policy? Would you take an equity and go and exchange it for a monthly shop? And it's unlikely that, taking into account if you use that type of thinking, it's unlikely that you can replace what we already have, but it is definitely something that's going to come about. I think the biggest thing for me right now is the fact that Bitcoin is going to be reused as a payment system as well as a type of payment or currency. So if we go to the next slide, I think at this point in time, it's really around sort of going back and saying there are three disruptive elements for me within banking and financial services. The one is that there is business operations and digitization, and we are already seeing this at scale. We are already seeing this ramping up. We are already seeing this happening at an exponential rate. And it's happening within our own financial services and obviously across organizations across the world. There are definitely alternatives to banking. Again, not something that is coming, but something that is already here, and very specifically the rise of the super app. WeChat, the most prominent one with 1.2 billion users, albeit with a very concentrated usage within China. But in the South African market, and something that's already available to us on the Nedbank Avo site, is definitely something that's going to change the way in which we engage with banks. Banks are no longer just going to be about products and services that we consume that relate specifically just to financial products. They are definitely going to be about banks that exist, that hold your information, that hold your data, and are able to offer you different products and services outside of the traditional banking environment. And then the rise and advent of technology like blockchain and the alternatives to currency like Bitcoin albeit that we are still trying to get our minds around how does it show up in our market and does it exist as a replacement. If we just go on to the last slide. I personally think that the gap is that banking skills and financial services skills are very much going to be something that we will continue to see, albeit lesser of it within our market. I think the introduction of technological advancement, as well as the introduction of social sciences and human sciences, need to be coupled with those components, and through that will definitely be the future of bankers and financial service or subject matter experts in the banking environment. Thank you. I think that really is my input for today.
Thanks so much, Matthew. We really enjoyed your presentation. I can see people have already started posting questions on the chat. Please continue to post more questions, but I'll just take the first question, which is from Corbus. In your view, is the banking industry sufficiently addressing talent development in crypto, especially if one of the multitude of speculative future scenarios is the full adoption of crypto? Can you comment on that, Matthew?
Thanks, Corbus. So on my side, I think that there is still a lot of unknown to it. And I think that from where I sit in my engagement, the banking environment or financial services environment is very much waiting for a decision to be made. I think that there is so much information out there, and I think there's so much to be done. And I think there's such a good opportunity to develop skills and position them ready for that decision. But I think that this industry very much is waiting for it to happen. I think there is some good work being done in spaces like, I know RMB has a definite focus around crypto, and very much other banks. And I think that they are very focused. I don't think that there's as much work being done at an industrial scale to consume this when it's ready. So to your question, no, I don't think enough is being done right now, albeit probably happening in smaller spaces.
Okay, thank you. The second question, I posed this question to you, Matthew, because I found your discussion around banks going tech and tech going banking quite interesting. So my question is, with banking going tech and tech going banking, is there a future for traditional banks? In other words, can traditional banks compete?
Thanks, Jamila. I think that banks can compete, and I do say it off the back of we still have a very, very traditional market. Banks have always been, especially in the South African market, have always been around, I trust my bank, I'm going to put my money with my bank. If I need to lend, I'm going to go to my bank. This notion of crowdfunding is not well known. The idea of going to an unknown and putting the value of your work into a space other than a traditional bank is not well known and untrusted. But I think as you see more traditional sort of focus areas going to tech, so shopping moving to tech a lot, I think banking does have a future, but it will need to be augmented drastically if it is going to capture that market that seems to be moving towards a very tech-orientated world.
Okay, thank you. We have another question here. Do you think banks are going to sell Bitcoin soon?
I suppose to be determined. I suppose the focus is going to be very much in cryptocurrency. But I think right now, the focus just is not there just yet. Definitely in the discussions that we're having, definitely in the sort of the focus around what our strategy is going to be. It's not something that is a key focus area. And I think it is going to be very much a reactive process. I don't think that they're going to get away from it. I don't think it's going to happen, whether it be a Bitcoin or Ethereum or whatever asset is going to eventually be used. I don't think they're going to get away from it, but I think it's going to be a reactive process rather than a proactive one. And to Kobus's point, I think when it comes about, you'll start seeing everybody spin up and starting to say, how do we start gearing ourselves up for this world that's already there? And it's definitely been something that you found around everything else. The advent and introduction of RPA into organizations, we're starting to gear our people up now, but it's been around now for some time. So to the question, I suppose, and linking it back to Kobus's question, I think they will do so, but I think that they'll be a fast follower rather than a first mover.
I think the one thing I found interesting during your presentation is how you were saying Bitcoin or these cryptos are more a payment system as opposed to actual currency or a payment medium. Can you just maybe clarify a bit more on that? So by saying that, you're actually saying it's actually not money, it's a medium of payment or a payment system.
Yeah. So I think, and I think that really defines is it an asset class? Is it something that you traditionally will use? Is it a legal tender, or is it just value? And I think the whole notion of around what cryptocurrency really is the transfer of value, and the transfer of value, the value of it is really the scarcity of it in the market. So that's why I'm saying. And based on the working paper that the SARB has also done, is to say there are two distinctive components to it. You are going to be using it as a payment mechanism as well as a value. And that's where the definition of it is so unnecessary or so undefined at this point in time. And when they do define it, I think it'll be a lot easier to clarify how we're going to then use it. Again, the point is, if it is both value as well as a mechanism, are you going to take a life policy to Woolworths and go buy a monthly shop? And I think that is really to be defined.
Okay, thank you. We have another question here, or a comment rather. It says, I have a concern where the banking industry is going tech at a fast rate compared to our government. Oh.
Well, absolutely. In fairness, I agree with the sentiment, but I also think we must give value where it really is due. So if you look at the exchange between the financial services sector and home affairs, you see them complementing each other and leveraging the work that each other do to provide that array of services to customers. Government, I think, is definitely going to be hindered by the ability to be fast movers, but I think that the working groups of public sector and private sector are definitely going to start adding value. You are already seeing noise in the system around things like being able to update your licensing online, and it's being done in conjunction with a lot of the financial services and companies. So I agree. I think that it's very difficult for government to move as quickly as private sector, just purely off the back of, there's nobody really driving the necessity for the digitization. But I think that they are seeing the value in it. And I think the Home Affairs one is definitely a case in point. So I think it's a really, really apt question, or comment rather. But I think there's really some really cool work that is being done out there.
Okay. We have another comment here. Can you comment on the information that some foreign banks are buying crypto, mostly Bitcoin, as a means of diversification?
I suppose really no. I'm not gonna comment on it. I don't know enough about it as a medium of exchange in the international market. I suspect right now it's around the extraordinary value, and the volatility means the possibility of generating wealth. But more than that, I can't comment on.
I think for me, I would just be interested in whether the question is around banks diversifying their source of income, or how exactly is this diversification seen? So maybe I think it's Svetlana can clarify to us so that maybe we can have a better sense of what he or she means by a form of diversification. So I think while we wait for a possible comment on that, we can I just want to look at the poll, because we did post a question, a poll around, do you think there is a technical gap in banking skills of the future? And most people actually said yes. There is definitely a gap there. Do you want to just comment on that in closing?
So, I think for me the gap of the future really is around what organizations ultimately will look like. So, I think there's a point that a bank today is going to look vastly different than a bank will tomorrow. And the reason I say that is because the products and services that we on-sell, with the exception of, in the corporate investment banking world where we produce different vehicles constantly. But the traditional banks, those products and services will probably not change, and they are probably not going to be updated in the near future. The banks of tomorrow will consume those products and services, and they're going to enhance it and produce things like enhanced rewards, enhanced digital engagement platforms. But the core products and services will not probably change. And in order for you to operate and excel and grow in spaces in the bank of tomorrow, it means that the skills required are not necessarily the skills required today. So it's unlikely today, potentially, when I say today, maybe in the last 3 years, that we would have had an influx of social science major type individuals, or people developing customer experience journeys. Customer experience journeys has become a major focus area within our organization. Are you introducing the relevant skills that are supplemented by those people who still understand what a check account is, still understand what a general ledger account is, still understand what a suspense account is? Because those people together become incredibly powerful. But we do run the risk of those social science majors and those client experience people and business analysts building services that they don't necessarily know are going to add value, or don't necessarily understand they're going to add the same value as traditional products will right now. So I think that there is a major gap that is forming, and that gap is growing bigger and bigger and bigger, because we've got lots of tech people, lots of customer experience journey mapping type people, lots of people building user interfaces, but they're not necessarily going to have the skills to develop it in the way in which it is needed.
Okay, thanks, Matthew. I'm just going to close by reading the comment from Svetlana. He or she says, I have read that banks are buying cryptocurrency as a diversification in investments and offer services to buy and sell crypto to some of their clients. So something interesting.
So I suppose what they're saying is they're starting to build reserves for it when it does become a medium of exchange.
Okay.
Understandable.
Thanks so much. Thanks, Matthew. It's been very interesting to listen to your presentation this morning. And thanks to everyone for participating and posting questions. Thanks. We will close.
Thanks, guys. Thanks, Jamila, and thanks to everyone online. Please give me a shout if you need any information, obviously on LinkedIn, but we'd love to hear from you if there's anything you'd like to chat about. But thank you so much for the time today.
Okay. Thank you. Bye.